property's a long game. Don't panic sell. I remember when COVID hit in 2020, we had a number of clients that went, Rich, the market's going to crash 30% like CBA is saying. And I said, don't panic. I said, just hold steady, buy well. All those clients that stayed with us and bought really well did incredibly well. Those that didn't buy literally got priced out of the market. We've got rising interest rates, but just because we've got rising interest rates, it doesn't mean it's the end of the world and we're going to have a recession in Australia. I think we won't have a recession in Australia. We might have one quarter of maybe backward growth if they ratchet up rates too fast, but we're just normalising interest rates. I personally think we're going to see the cash rate top out at around 2.3 to 2.75%.
And where is it now?
It's at 1.85, right? We've just had emergency levels from 0.1%, which is virtually a 0% cash rate. The Reserve Bank was actually a bit too slow to pull the trigger. And what they shouldn't have done, they shouldn't have said there'll be no rate rises till 2024. Well, what's everyone done? Everyone's loaded up with debt, gone a bit too hard, and now they've got to unwind that, So they've created too much momentum in the economy. They've got to pull it back. They've got to contain the inflation beast, which is going to be contained anyway as supply chains get back into order. So that's going to happen. But the big thing I'll say with going long in property, a couple of reasons why. You've got migration that really needs to ramp up. The target's 160,000 people. We really should be at 250,000 per annum because we have a massive shortage of workers in this country. Probably 5-6 years ago when I used to do a lot of seminars, I always put up a chart from ANZ Bank which showed the imbalance in the property market between supply, what's actually needed, and demand. And there was always a big gap. But the last 5 years, we've actually got back to a more equilibrium market. We've actually developed generally enough property, but the next 10 years, we're heading into a phase of undersupply of property yet again, particularly in our capital cities. Generally, migration is going to be one of the major factors to drive the property market. Cheap money's been obviously driving it, but just natural population increase and migration increase is going to see the property market stabilise.
So in summary,
look, don't panic, as I say. Look, it's a great time to buy now. If you're answering, is it a good time to buy when there's peak panic, which is right now. If you look at the consumer sentiment curve, we're down to about the index of 80. So the Westpac Institute index is down to about 80, which is the same period of depression as we had when COVID hit and in the GFC. So these are the times when you can buy exceptionally well. And you can ask me later, but I've just bought 2 properties in the last 3 months.
And for those people who don't know what the index means, what does it actually mean?
It measures people's propensity to spend and their feelings about where the economy is going. So consumer sentiment measures how people feel about their wealth and about the economy.
And so you're saying that makes it a good time to purchase because if someone puts a property up for sale, there's going to be a lot less people bidding on that property and therefore you get a better price?
High quality properties are still selling well, but generally the market's come off around 10 to 12%. Very different to what the headline figures are. CoreLogic will say Sydney property prices are down 4.7, Melbourne prices are down 2.8. That's rubbish. They're about 3 months out of date. In actual fact, I can go out and buy a property for you tomorrow, Daniel, at around, as I say, 8 to 12% discount to what you'll see a price advertised for. So a really good time. Vendors are much more negotiable. There is less stock until we hit the spring season. But if you're looking to buy next 3 months, ideal time to get in.